Right, let's get started. Firstly, thanks everyone for registering. So appreciate it, you giving up your time. So this webinar is basically all about looking at the challenging aspects of the market, and as we know, it's becoming increasingly more unpredictable. There's political change, there's economic uncertainty, and that all can impact sales risk. So that's where we're going to come in and look at what LDS sort of sales guarantees can do to support brokers, house builders, lenders against some of these challenges. So today, Norman's going to sort of give a quick introduction, talk about the market, and then Mark's going to take you through how the LDS sales guarantee works, the benefits, the processes, and then kind of talk about a development where we worked on with Piragash and how that worked. So I'm going to mute myself and pass on to Norman. Away you go.
Good afternoon, everybody. I'm delighted to be opening up this webinar this afternoon for LDS. And as Seb said, in a few moments, you'll hear a bit more from Mark and from Piragash as well, one of the NACFB members. But I think to start with, I just want to really talk a little bit about the market. I guess I'm a little bit tired about talking about unprecedented times, and perhaps we should just talk about it being the new norm, because we seem to be moving from one challenge to the next. But one thing for sure in terms of the finance market, and in particular the intermediaries and the funders, is that we are incredibly resilient. Now, in terms of how LDS will be looking to support us, we were delighted that they joined us at the NACFB last year. They were nominated for a couple of awards, as well as being the most innovative lender and industry supplier. And already they've made quite a substantial mark within the NACFB of supporting lots of developers, lots of brokers, and I can only see that growing for the future. And this would appear to be the right time now for LDS to be able to help everybody. So let's look at a little bit about the market conditions then. So where do we begin really? Let's look at what they're talking about interest rates. So interest rates are likely to go up by at least 0.5. Some of the more bullish predictions are it might increase by 0.75. So what will that mean? Well, that is going to have a bit of an impact on particularly your tier 2, tier 3 funders, because the cost of funds is going to be quite more expensive. And then you start to look into other areas that are going to affect the property market, which is all around the labour costs and material costs. Only a few weeks ago, I was looking at a particular deal over in Clapham, in southwest London, where it looked like the broker put together a lovely package for a development finance at 1.2 million. And in the space of a week, that moved to 1.9 million because of the costs in supply, materials, etc. So that's not going to go away in the short term because of other factors that are outside our control, particularly things around the Ukraine and aspects that happen in that part of the world. You've also got other things that will impact the market as well. And that's, which will be on a positive side, I hope, is stamp duty. So hopefully we'll hear some good positive news later in the week that they're going to do something around that will help. As always, it'll probably take a little bit of time for the details to come out, but I think that will help the market as well. On the plus side for property though, that is also quite a resilient area. And when I've looked across what the rental yields are up and down the country, although they are, there's a few pockets in the country that might be doing 9 to 10%, on average is around 5%, and particularly the areas around Birmingham and Liverpool and Newcastle, around that area, they're performing quite well. And depending on who you follow in terms of Savills or other well-recognised names, you'll see the predictions for the next 2 or 3 years' time has been very bullish in terms of how that's going to increase as well. So the current state really is not for the faint-hearted. People that are involved in the property market should stand true to what they stand for. The other bit that I wanted to just talk about, really, if you talk about the labour and the materials cost, is that part of that is also going to be involved with the energy crisis. So again, more news is coming out on that. You would have read in the press that I think it's going to be halved in terms of electric costs for businesses, and maybe 25% reduction on the gas charges. And the government is already looking at potentially extending that over a longer period of time as well. So I think that could provide a little bit of a stimulus to a lot of the support businesses for the property arena. So I think a lot of the suppliers and other partners that we deal with in that particular space may well be able to hold us in a good state, really. The property prices are really holding pretty well. People keep forecasting there's going to be a reduction in the pricing, but as we've spoken about before, the demand for property is still high. You know, the facts are we're still not building enough, and therefore the demand for what's out there and for the resale market is still quite high, and also for the buy-to-let arena as well, for that sort of side of things. So, as I said earlier, it's not for the faint-hearted. There are a lot of headwinds, but it's also quite an exciting time, I think, if you're in this space. And with LDS as a partner of the NACFB, I think they've got a marvellous scheme that would be able to support many of you property specialists that are looking to support. So on that note, I'll pass over to Mark to tell you a little bit more about how the scheme works and how it can really benefit brokers that are on this call today. But thank you very much for taking the time to listen.
Thank you, Norman, and thanks for the insights. All obviously very useful, and I totally agree with everything you said. First of all, thanks for everyone joining the webinar today. And my role is I am a relationship director at LDS. My background is 20 years commercial banking, working for various development lenders in the UK. So I have a good knowledge of the broker network, what both brokers require, and also structuring transactions to get you guys the best deal possible for your client. So the purpose of today's presentation is it'll outline who we are, how we do it, and the benefits that we can bring by totally removing sales risk for your developer clients, whilst also reducing their equity requirements, which should hopefully enable you guys to convert more transactions going forward. So how do we do it? So it's an upfront commitment to purchase any completed and unsold homes on a development site. The key word within that sentence there is unsold. The developer still retains the autonomy to sell every house on their scheme. This removes the sales risk for SME house builders. They've got the uncertainty that should any units remain unsold, they can call upon us to purchase them and move on to their next project. This obviously massively improves their credit profile. In addition to this, we pay them a 10% deposit cash based upon our underwrite value, which they can use towards the cost of their scheme, and so long as they are using one of 3 warranty providers, ICW, NHBC and Checkmate. This has the benefit of reducing the upfront equity required by a developer by up to 67%, which enables them to do 3 more schemes of a similar value, or 3 times the volume in terms of the units. So what's our criteria? Our criteria is we will provide our sales guarantee on any housing and apartment scheme across England and Wales. We need them to be between 5 and 60 units per scheme or one phase. We can consider larger schemes so long as each phase is limited to 60 units, with GDV levels between 1.5 and 35 million pounds. We have to max out at a GDV of 1 million per house and 750,000. That's just due to the way we're secured via the warranty provider and the loss of deposit cover running out at £100,000 per unit. How are we secured within the process? As I alluded to earlier, we're secured via Section 1 within the warranty package. So we require each developer to have insolvency cover, which includes the loss of deposit, because our money goes into the deal as a deposit, not a debt. It's a very key difference, that, and that enables us to have an intercreditor agreed with the majority of, every lender that we work with. We have an intercreditor agreed with, which means that we can transact quickly and we don't get involved in intercreditor agreements on a deal-by-deal basis. So that means that you guys can complete your transactions quicker for your development clients. So what are the benefits to brokers? So as I've alluded to there, we can increase your conversion by offering increased leverage and a quick completion process. The intercreditors agreed, and also we can allow a developer to get up to sort of 95% loan to cost. against potentially 85 without us in play. We can take leverage from your standard 67% loan to GDV to well above 70, up to 75% loan to GDV. We'll pay you broker fees against our sales guarantee, and that is typically 0.1% of the GDV of the scheme. We view ourselves as a simpler, interest-free alternative to mezzanine with no security required. We're obviously secured by the warranty provider. So what are the benefits to the house builders? So each house builder obviously benefits from a 10% interest-free our deposit, which reduces their cash equity by 67%. It allows them to build 3 times more new houses and more than treble the returns by the increased return on investment. We work with many lenders across the UK, and we have agreed products with several of them and are in negotiations with many more. We also have agreements with most lenders to work on an ad hoc deal-by-deal basis and have the overarching intercreditor in play. This basically allows the lenders to have the benefit of totally removing sales risk in all market conditions, which may lead them to do marginal deals that they may not have considered previously. It allows them to increase lending to new and existing borrowers. Obviously, the developers have the requirement for less equity to go into the transaction. It can allow their equity to go further. And we can maximise that opportunity and have done with several UK lenders where we have arranged a joint product where they will agree to go to a leverage percentage, usually between 65 and 67% loan to GDV. And our deposit is added on top of that, which increases the developer's ability and reduces their equity requirements. So I've got here a sheet which pretty much brings that a bit more to life and hopefully may allow the audience to understand it a bit more. We've used a example 10 million GDV scheme, let's say of 20 houses, all worth £500,000. On the left-hand side, there's the speculative scheme, which is based without LDS and just senior debt. So we've based it on a 7.7 total cost to the house builder, of which a senior lender will probably offer circa 65% loan to GDV, being £6.5 million. Total funding further down the line is 6.5 million, which total funding to cost 84%. The house builder cash contribution, being the difference between the 7.7 and the 6.5, is £1.2 million. The broker earns 1% of the senior debt, and the house builder has to find the 1.2 million cash equity. If we move over to the right-hand side, this is the LDS Sales Guarantee structure. Again, the first 3 lines remain the same. GDV, total cost, lender debt at 65% loan to GDV. You then see the LDS deposit release come in at £800,000. What's that £800,000 based against? We provide our sales guarantee at a 20% discount against the red book valuation. So our guarantee on this case would be £8 million, and we pay a 10% deposit, which is released to the developer, assuming they have the warranty provision to use towards the cost of their scheme. You then see the impact of that on a total funding package, which is elevated to 7.3 million, a 73% loan to GDV, and a 95% loan to cost. The house builder cash contribution reduces drastically from 1.2 to £400,000, and the broker fees increase from 65,000 to 75,000 with our extra 10% with our extra £10,000 in play, based on the 0.1% of the GDV. What's key there for the majority of brokers in the room, this enables you to stretch the debt slightly further. It may allow you to, even if a developer comes to you and just wants senior, it may allow you to push an LDS product down the developer's route, and it may allow you to do 2 or 3 schemes with this same developer that you may have not done previously because of the limited equity. So it allows a developer to do plenty more, and I recommend that as many brokers on the call try and use this LDS offering, even if the developer is only after senior debt, because it may allow you to do more business with the same developer. So on our website, unfortunately, I can't do this interactive tool as part of this presentation, but on our website, ldsyoursite.com, we have an interactive tool where you can go on, you can tap that you're the broker, and you can slide the arrows there left and right on the GDV and press to see the difference, and it will generate you the actual difference on a transaction on that similar picture that we've just gone on through on the previous scheme. So what's the process? How do you go about generating a sales guarantee? So on our website, ldsyoursite.com, you can go on. There's plenty of information there in terms of how it works, structure. So if you want anything clarifying, post this webinar, please go on and have a look. But you can also generate your own instant sales guarantee, which will form a part of this presentation shortly. On the website, it takes under 2 minutes, and it will come back to you with an instant, almost decision in principle. You use that decision in principle in conjunction with your senior debt, and we will do our necessarily usual due diligence and approval, which will involve meeting the borrower, meeting the site, red book valuation, and an independent monitoring surveyor. What is key is we will use the lender's valuation and the lender's IMS. So there's no two sets of professional fees involved for the developer with using an LDS sales guarantee. We will use the senior lender's valuation and IMS. We then go through the legals, we exchange, our deposit is released, we pay the broker fee, and we pay the deposit to the developer. The developer then goes away, builds all those houses, and sells them all on the open market, hopefully not calling upon LDS to purchase any of those units. So here is a quick rundown of how to generate your instant sales guarantee. I'll press play. So it is a 5-step process, which is again via our website, ldsyoursite.com. And there's plenty of tabs within there. You can see one there at the top, highlighted in green, instant guarantee. Literally the first page is the scheme name, street, county, postcode. And then we continue through this. How many open market houses are there? How many open market units are there? Apartments. Again, if there's any affordable, please put in there. The GD fee is key. The key for that is obviously the GDV on the open market units only at this stage, and then just some sort of timescales in terms of what the developer's working towards. We then go a bit more detail: site owned, contracted, planning status. Do you have finance agreed? No. If it's no, we can introduce you to one of our panel lenders. If it's a yes, we're happy to work with any UK-based development lender. And again, then you put in your details: broker, house builder, contact details. And as you can see, this process is, I think this video lasts 1 minute 54, so it is genuinely under 2 minutes it will take you to go through this process. Obviously GDPR at the end, and then continue. Review that everything you've answered is correct. And submit. And you will get an on-screen prompt, which basically will generate your guarantee. You will also receive a follow-up email, which will be direct into your inbox, which looks very much like the item here on your right. So it will have the site details, it will have the GDV, the number of units, the guaranteed purchase, and how much cash LDS would release on exchange to the developer. It's almost like an instant decision in principle straight to your inbox. It could not be any simpler. And then what we recommend, you will then receive a follow-up call from one of the sales team at LDS. We will give you a call to find out where you're up to in terms of the debt. Have you got a lender agreed? Would you like us to engage in conversations at this stage? Have you got would you like to be introduced with a lender that we work with? There's several UK lenders, and we can introduce you to that panel and make your own decisions. So what does it cost? The interest, so the key part is there is no arrangement fee. It's 0% coupon interest. We're purely remunerated for a fee that we charge for the release on as each one sells on the open market. And with the fee scale here is based upon, so to achieve a 2.99 accelerated sellout, assuming that the developer has exchanged all properties, and that's exchanged, not sold, because we get our deposit monies back as each unit exchanges. If that has occurred within 18 months of us exchanging contracts, and we've had all our deposits back, and the developer has onwardly sold or exchanged all the properties on that scheme, they will pay 2.99%. And that 2.99% is based upon day one Red Book GDV valuation. If they've sold it over and above that number, we still charge it based on a 2.99 GDV. If it goes beyond 18 months and they sell them all within the agreed contract, and our contract can go up to 36 months, dependent on the size of the scheme, they would pay a 3.49 sellout fee. If they aren't as successful and they don't sell all the units, there is a fee scale that starts at 6.99 and reduces to 5.49 and then 3.49. What's key is, until the senior debt is repaid in full, we only charge a 3.49 fee per unit. We defer any fees until the senior lender's been repaid in full. So that's the end of sort of LDS, what we do. Hopefully everyone's got a better understanding of our products, how it works in the market, how it works in terms of the pricing, how we're secured, and hopefully we've extended everyone's knowledge in terms of being more confident and discussing that with your clients. Obviously, I'll be happy to take any calls off anyone within the webinar at any stage, should there be, or we are going to have a Q&A session at the end. What we thought would be useful is we've also invited Piragash Sivanesan of Totum Finance to just go through a scheme that we have transacted with him and one of our mutual clients. So if I could just bring Piragash in now to go through that, if that'd be okay, Piragash?
Yeah, absolutely.
Okay, so I think what would be useful, Piragash, is just a bit of background, how you found working with LDS, the benefits we brought to your client. If you could just sort of give us a minute or two on that.
Yeah, I think like any broker situation, when you're working with either an existing client or you're looking to compete and win business for a new client, what's critical is new products, new ways in which you can provide different options. So in this case, the client had gained planning on a site, and so the option price that they had versus the value was significantly different, which meant there was already soft equity in the deal. And although they'd started and put certain money in terms of demolishing, etc., they didn't really want to add more equity in. And I think a step back first, I think all of us as brokers, there are a multitude of different debt providers, senior debt providers and mezz providers out there. And really our job is kind of navigating the differences between them both. And I think what the LDS product does is it neatly provides an equity solution. There aren't so many institutional equity providers out there. And while LDS is not strictly an equity product, what it does do is it allows and it enables the client to look at the amount of equity they have and whether they should put all of it in this project. There's been a lot of discussion around the improved returns, the ROE as a result of putting in less equity, and that's obviously fair. But I would also flip it on its other side and say that you know, when any developer takes on a project, often, not always, there's either a capped PG or a total PG, and especially in this environment, you know, as Norman alluded to, we've got interest rates going up. Although the property market's been stable, of course, our clients are going to be looking at delivering these in 18 months' time, and there is a way to kind of review and sensitize the impact of if the deal goes wrong, you know, what happens in this kind of scenario, and versus say bringing in a mezzanine provider who's also going to be looking at their own situation and trying to understand and unpick a development that's gone wrong. LDS, of course, during the construction would fall away if the borrower falls away, and that exposure, you know, has no further liabilities. But and as far as the senior debt's concerned, if there is a PG, or if it's built, instead of the lender looking to the borrower to claim the PG, there is almost this kind of insurance, if you like. It's not right to call it an insurance product, but obviously you can give these finished products to LDS. And it was really useful for me as a broker to talk through those options with Imagine Property in this case, where we weren't just looking at it standard 65% loan to GDV, which of course is certainly something that we offered, but by being able to widen the discussion, not only in terms of ROE, but also risk. And then also, even if, for example, Imagine had an equity provider, for example, that was ready to do the deal, maybe it's a private investor. What's great about LDS as an institution is their appetite, I would say, and forgive me, Mark, if I'm putting words in your mouth, it's less likely to suddenly disappear. You know, we've seen transactions where $500,000, for example, has been promised by an equity investor, but when it gets close to the deal, because of delays, that 500,000 has gone elsewhere. And I think with LDS, that it works slightly different in that there's an institutional commitment to this sector and to this development. You know, the wider groups involved in property, and all of those were really positive aspects that were in the mix when we, you know, advised the client of the different options that they had. Hopefully that's helpful.
That's brilliant. Thank you, Piragash. So I think that brings the webinar to sort of a conclusion. Now, there's I'm happy to open it up to questions for myself, Norman, or Piragash. I have received one whilst we were going through the presentation, so I will take that now. And then if anyone else wants to tap their questions into the bar, please do so at any relevant time. So the first question is, at what point of the deal can you provide the sales guarantee? After planning, pre-planning? So we can provide the sales guarantee at any stage during the planning process, so long as we understand that it is obviously, but obviously we can only exchange post-planning when it has full detailed planning, because we need to know exactly what kind of property we are agreeing to purchase within our agreement, because we are exchanging to buy a house of a certain type, and we would need the details in terms of the actual fixtures and fittings that are going into the house, in terms of kitchens, bathrooms, etc. So in answer to the question, we can provide the sales guarantee at any stage during the planning process, but we can only exchange once detailed planning is in place.
Right, okay, we'll just give it a couple more minutes in case anyone else has got a question.
I can throw in a question. I mean, for Mark, obviously it's great that you know, we did a deal, and I'm seeing that you're widening the number of lenders that you're looking at. I mean, how many lenders are you currently working with, and what's the kind of you know, max potential loan to cost that could be funded via an LDS, depending on the lender?
Okay, so we have actual structured agreements to work with 4 lenders, and that is on an actual sort of product, an agreed product basis. And then we also have an agreement to probably work with up to a dozen others on an ad hoc basis, and they will be names that everyone in the room would recognise. Piragash.
Great. Okay.
Now I've got some questions filtering through, so I will pick these up now, which is good to get some interaction from the room. How would the senior lender be able to call on the guarantee to repay the senior debt in the event that the scheme is built out and the developer does not achieve any sales? So within our contract, we have what's called a long stop date. Okay. And that long stop date is agreed with the developer and the lender at the initial exchange of our contracts. So the lender could, if the lender is uncertain about the sales that are going through post completion of the scheme, they could recommend that the developer engages with us at any stage within that sales process. The CD lender couldn't enforce sale because it's very much driven by the developer. We have a call option in the last month of our sales guarantee where we can call upon the developer to purchase the units. What's also interesting though for you guys as brokers is that we don't necessarily see sale as the only route to exit of our facility, of our contract. If there, for example, are 5 houses on a scheme that are remained unsold, 5 of 20 houses, and the developer wants to extend that sales period without having to sell to us, then it also gives you guys as brokers another good opportunity to get around the table and earn some further fees by structuring the mod development exit bridge, where there will be sufficient equity within the deal so that they could repay the existing senior debt and also repay our deposit in respect of each unit. As long as we've had our deposit back on each individual's unit, we would class that as a sellout within the process, and they would achieve the low 3.49% fee threshold. So it's also a positive for you guys having us involved at that process, because it does give you as brokers another avenue to get back around the table and discuss refinancing towards the end of the sales process.
I mean, one thing I want to add, Mark, just more of a question for you on a related topic, is that I know, we had discussions where the long stop date can actually be, depending on the underlying development finance, longer than the sales tail of the development lender. So you do have a little bit of flexibility. It's not like it reaches the end of the senior lender's term and the whole thing, falls apart. I don't know whether you still do that, but certainly as a broker, that again adds a little bit more certainty to the underlying structure.
Also, I mean, it's very much driven by each lender we work with has slightly different nuances. So some allow us to go beyond the sale because obviously typically senior debt should be out once 70% of the stock on site sold. So they understand that the developer would like a certain run-off period beyond that, and we're more than comfortable to do that, Piragash. So it's all about structuring the right deal for you guys as brokers, for the house builder and for the lender, and we're more than happy to do that. Okay, next question. Do you offer a referral service? We don't at this stage. It's something that we have actually looked into, and we may be considering it in the future, depending on traction and offering that we receive from individual brokers at any one time. Next question. Have you ever had a deal go wrong, and for what reason? We haven't had a deal that's gone wrong as such. What we have seen probably over the last 6 months is, like many people, or there's a couple of schemes that we're on that have actually the build period has actually become extended due to no fault of their own. I mean, it's labour shortages, material shortages, cost shortages, which has impacted in terms of reducing the probably sales period within that transaction. And what we will do, and what we have done, is we've sat down with lenders and we would happily discuss a slight restructure in terms of our facility and work with developers and lenders to support them through that process. Getting plenty of questions. Very good, this. So how long does an LDS deal take to go through? it takes typically almost identical time to the lender, although our process is a little more streamlined than the lenders. Although we do have a very similar due diligence process, so we would always ensure that our legals are matched up with the senior lender's legals, and we can exchange simultaneously to when the senior debt is in place to complete the land acquisition or refinance, whatever that may be. You mentioned payments of LDS fees on exchange of sales, not completion. That might just have been a way I've worded it. Apologies. So we pay our fees on exchange of our contracts, which is when our money goes out of the door, and the fees will be due to brokers at that point, and we would pay them at that point.
I think this one from Cornelius is just linked back to his question before about how long does the LDS deal take to go through. I think he might have just typed it across 2 parts, that's all.
Okay, so hopefully that that's covered that, Cornelius, because obviously we're reliant on the senior lenders valuation and IMS as well, so it's very much dependent on how quickly they come back, which is when we formally start the process rolling. So it's very much reliant upon the senior lenders professional reports coming back, but we are very fast and very flexible. A site with covenants of provide houses to site vendor saying house built prior to X amount of sales. This is to secure vendor's part payments. Would that be accepted, similar to an overage clause?
I think Nick's got something else. He's got put sorry fees from developer to you. I think that's part of his question just at the bottom there, Mark. Got that.
So I don't know if this is a question in respect of deferred consideration. It may well be. I'm not sure, but so our only criteria within the transaction is that a developer has to have 5% equity within the transaction. So we will go up to 95% loan to cost with the majority of lenders we work with. I don't know if that answers the question, Nick. Hopefully it does.
So I think that's
Nick's put thanks. So hopefully that does. Yeah, I think that's all questions answered for the time being. I'll leave it open for another minute. So if anyone else would like to answer any questions, happy to take them on board. And what I'd encourage everyone to do who's obviously been on the webinar is have a quick look on the website, ldsyoursite.com. My contact details are on there. Happy to have a call with anyone that's got any other questions that we've not gone through. Have a play about with it. Even if you want to use the sales guarantee just to run it through as a test, if you just put a test in terms of the site address and have a play around with the figures, it should hopefully give you an understanding. Okay, Samantha Williamson, that's a familiar name. Hope you're okay, Sam. Are you buying unsold units at 80% of the Red Book valuation at the start of the scheme? We are guaranteeing to buy them at the start of the scheme, but we don't buy them. The developer always retains the autonomy to sell them, achieving 100% of the Red Book valuation. So we're guaranteed to buy unsold units, but we're not buying them at the start of the scheme. It would be right at the end of the sales period that we would purchase them. So the developer still has 18 months or 24 months, whatever your loan term, because I know you're looking this from a lender's perspective, Sam. So it would be at the end of your sales period. So you can still, I meant what value are you? Yeah, we are placing 80%. Sorry, there's a follow-up question there from Samantha. What value are we placing on them? We guarantee to purchase them at 80% of the Red Book valuation. Okay, I think that's hopefully any more questions. If there's any more questions, again, happy to take them via phone. All my contact details are on the website.
Just another thank you for everyone for joining, and we'll follow this up with the recording of the presentation, and we'll send a sort of PDF copy of the presentation as well. And like Mark says, the details on the website if you want to call with any other questions. But thank you very much.
Norman, would you like any conclusions, or you okay to end it there?
No, that's fine. Just I thought it was very, very well worth undertaking this today, and I hope that the people that joined get real benefit out of that. I thought it was very, very clear. The website's very clear and concise what happened. So great to be a part of it. Thanks very much.
Thanks, Norman, and thanks again, Piragash.
No problem.